Welcome back to the channel and the very first Power 5 of October. As hard as this is to believe, we're now entering quarter 4 of 2023, so it's time to hunker down and make sure you guys achieve those goals you set in the beginning of the year.
Money. That's the goal then.
For those of you who are subscribed and familiar with this series, thank you for coming back. And for those of you who are new here, allow me to explain the idea behind this series. The Power 5 is an idea I had to look at 5 common categories valued by us dividend investors and find the best stock in each of them. The categories I chose are the highest dividend yield, the longest dividend streak, the highest dividend growth rates, the best 10-year returns, and the stock trading the highest percentage off of their 52-week high. This series is a fan favorite of the subscribers here on the channel because it's updated weekly and doesn't skimp on quality like some of the other lists you might find on YouTube. Each stock mentioned in today's video will have a dividend streak of at least 5 years, outperformance of the S&P 500 over the past 10 years, and as a bonus, all of these stocks will have an ex-dividend date of this coming week. As always, no matter how much you like me or this series, it's always very important to do your own research to make sure these stocks are right for you. If you're looking for a fresh take on a top 5 series that you're not going to find anywhere else on YouTube, make sure you guys click that subscribe button and tune in each and every Friday. Now, let's check to see how my simple yet effective filters help me narrow down this week's list. I began with 74 different dividend stocks that had ex-dividend dates between October 2nd and October 6th. Then I went down to 30 stocks once I required them to also have a dividend streak of 5 or more years. And finally, the list was brought down to just 12 stocks or 16.22% of the original list when I filtered for only the stocks that had outperformed the S&P 500 over the past 10 years. From there, I let the numbers speak for themselves, and here are the best of the best. First up, we have this week's high quality stock with the highest dividend yield, which might also be at an attractive buying price, and that is Hannon Armstrong Sustainable Infrastructure Capital, stock ticker HASI. HASI is a quarterly payer in the real estate sector, paying $1.58 per share per year with a forward dividend yield of 6.66%. HASI has been paying and growing their dividend over the last 5 years. They have a 3-year dividend growth rate of 4.17%, a 5-year dividend growth rate of 2.87%, and a payout ratio of 67.94%. At the time of recording, HASI was trading 40.21% off of their 52-week high. HASI has an ex-dividend date of October 3rd with a payout date of October 11th, and a $10,000 investment into HASI 10 years ago while only reinvesting dividends since then would have brought back $34,289.14. This is a 13.11% year-over-year return rate. That's compared to the S&P 500 that brought back $30,408.59, resulting in a difference of $3,880.55 over the past 10 years. Next up, we have this week's stock symbolizing longevity by consistently increasing their dividend, and that stock is Erie Indemnity, stock ticker ERIE. ERIE is a quarterly payer in the financial sector, paying $4.76 per share per year with a forward dividend yield of 1.64%. ERIE has been paying and growing their dividend over the last 33 years. They have a 3-year dividend growth rate of 7.24%, a 5-year dividend growth rate of 7.23%, and a payout ratio of 53.72%. At the time of recording, ERIE was trading 1.93% off of their 52-week high. ERIE has an ex-dividend date of October 4th with a payout date of October 20th, and a $10,000 investment into ERIE 10 years ago while only reinvesting dividends since then would have turned into $51,437.40. This is a 17.79% year-over-year return rate compared to the S&P turning into that $30,408.59. This is a difference of $21,028.81 over the past decade. This week's stock voted as the best boss by giving out awesome raises is MasterCard, stock ticker MA. MasterCard is a quarterly payer in the technology sector, paying $2.28 per share per year with a forward dividend yield of 0.57%. MasterCard has been paying and growing their dividend over the last 12 years. They have a 3-year dividend growth rate of 13.24%, a 5-year dividend growth rate of 17.67%, and a payout ratio of 15.68%. At the time of recording, MasterCard was trading 3.95% off of their 52-week high. MasterCard has an ex-dividend date of October 5th with a payout date of November 9th, and a $10,000 investment into MasterCard 10 years ago while only reinvesting dividends since then would have brought back $62,570.75. This is a 20.12% year-over-year return rate compared to the S&P bringing back that $30,408.59. This results in a difference of $32,162.16 on the side of MasterCard. And we're now down to the final stock on this week's list, which is the one with the best 10-year returns. Before we get to that, if you wouldn't mind taking just 1 second to leave a like on the video, as it helps me continue to grow the channel. And if you're not yet subscribed but have an obsession with dividends and passive income, go ahead and click that subscribe button to join the crew. I post these lists, monthly recaps, dividend interviews, and other special dividend related content at least twice a week. Thank you all so much, and now let's get to this final stock. This week's stock that's going to make us all mad we didn't invest sooner is Intuit, stock ticker INTU. Intuit is a quarterly payer in the technology sector, paying $3.60 per share per year with a forward dividend yield of 0.71%. Intuit's been paying and growing their dividend over the last 12 years. They have a 3-year dividend growth rate of 13.61%, a 5-year dividend growth rate of 14.87%, and a payout ratio of just 21.62%. At the time of recording, Intuit was trading 9% off of their 52-week high. Intuit has an ex-dividend date of October 5th with a payout date of October 17th, and a single $10,000 investment into Intuit 10 years ago while only reinvesting dividends since then would have brought back $83,665.25. This is a 23.66% year-over-year return rate. Again, that's compared to the S&P that would have brought back that $30,408.59. This is a crazy difference of $53,256.66 on the side of Intuit over the past 10 years. Now today, you were exposed to 4 different dividend stocks that not only have dividend streaks of at least 5 years, but they've all outperformed the S&P 500 over the past 10 years and have an ex-dividend date of this coming week. Let me know down in the comments if any of these stocks piqued your interest and what it was about those stocks that got you excited. Thanks for watching, and until next time, see ya.